Welcome to another Wall Street Informer production on WSI TV.
Welcome back into WSI TV. I'm Sean Bauer, Chief Editor of Wall Street Informer on wallstreetinformer.com. Now you know that the Wall Street elite are always trying to take advantage of you for their own gain. Well, right now I'm about to highlight a dirty little secret that they use to sacrifice your trades in order to put some extra cash into their pocket. But as we go throughout this WSI TV episode, you're going to learn a trick of your own, a trick that's going to protect you from this Wall Street sabotage. Now to get started, we first need to go over a stop loss order and what that is for any of you who may not know. The definition of a stop loss order is an order placed with a broker to close a position when the security in question reaches a certain price. So let's say that you want to buy Microsoft stock at $100. Whenever you place that buy trade, you may include a stop loss at $95. What that means is that whenever Microsoft stock comes down to $95, that stop loss will automatically trigger and you'll be closed out of the position. Now, a stop loss is a great tool to use to protect yourself from any downside risk, but it's also something that the Wall Street elite can use against you. Let's quickly take a look at a quick example that I found to illustrate how the insiders on Wall Street are going to use these stop losses against you and then what you can do about it. What you're looking at right now is the chart of Middlesex Water Company, and that's thanks to stockcharts.com. For any of you who don't normally look at stock charts, each of those black and red lines that you see going throughout the chart, that's the price of Middlesex Water Company stock throughout the time period of April through basically the beginning of July. Now a black line is whenever the stock is up on the day, a red line is whenever the stock is down on a day. And these are using HLC bars. HLC stands for high, low, close. So if you look at any single day, you'll see the range of the price of the stock from the high point to the low point, and then the closing price is that tiny little horizontal line that's in the middle there somewhere. And what you're looking at now is the same exact chart of Middlesex Water Company, but with my blue markings drawn in there. And we're going to use these to illustrate how the Wall Street elite take advantage of your trades, how they sabotage your stop loss orders in order to gain something on their end. Now, these long blue horizontal lines are lines of support. That's where there's a lot of buying support that comes in when the price dips back down to those levels. And as you can see with this first line, the price of Middlesex Water Company got over that blue line, which is drawn in at about $35 even. It got over that line in the middle of April, bounced off of it a couple of times, and continued climbing on through June. Now you can look at that second line as well. You see another line of support drawn in there between $38 and $39. And once again, after it got over that line, it stayed above it, even bouncing off of it once or twice again. Now those lines are important because whenever the price of Middlesex Water Company or any stock dips down below and closes below a line of support, that should signify that there is not enough buying support to keep it up and that there's more selling coming. And that should mean a decreasing price for whatever that stock is. So if you don't know about that support line and it dips below there, you could be in for some heavy losses. That's why these technical analysts will often put their stop loss trades just under a line of support, so they're protected from those big losses coming. The big issue here in how the Wall Street elite use those against you is because traders on the floor can actually see all those stop losses lined up just under those lines of support. When what they'll do is, throughout a trading day, they'll sell down the price of, let's say, Middlesex here, as you can see on the days where I put circles around. They'll sell down the price so that it gets below that line of support and triggers all these stop losses that are lined up. Now that brings the price down even further and makes it cheaper so that these traders on the floor can then buy it back at a cheaper price. And as you can see in each one, it then closed above the line of support. So they do this in intraday trading, where the price can be extremely volatile and then closed above the line and, just like normal, continued climbing. Now these big tails signify exactly that, and that's a perfect example of how these insiders, how these Wall Street elite use your stop loss orders against you. And just to clarify, whenever you have an open stop loss order for intraday, that as soon as the price gets down and touches your stop loss, it's going to close out the position. So on these 2 days where I circled, where you see those long tails down below line of support, everyone who had a stop loss order open just under that line of support was closed out and probably took a small loss. Now the bigger issue is that by getting these trades closed out, you missed out on some big gains. So with that first line of support, if you had an open intraday stop loss order placed, on that day I have circled, you would have been closed out at, say, $34 or $34.50 before you see those big time gains when it eventually got up to $42 and $43. Now those are significant gains you would have missed out on because these traders on the floor, these Wall Street elite, knew to bring it down to your stop loss, trigger it, and then buy it back. That's just one trick they use to sacrifice your trade in order to get this stock just a little bit cheaper and make a little bit more money. Now the good news is that we're actually going to show you a little trick that helps you protect yourself from this Wall Street sabotage and keeps you from having these stop losses triggered and missing out on these big gains. And that's going to be using a closing price stop loss. Now a closing price stop loss is simply something that only triggers at market close. So where a regular stop loss, that's active for intraday trading, where you see all that volatility and where you can have traders on the floor in Wall Street bring the price down and hit that stop loss before buying it all back where it closes above that stop loss. All this cares about is the price of the stock whenever the market closes, so at 4 o'clock. Now these can sometimes be set up with your broker if you tell them, I want a stop loss that only triggers at the close. But what's more likely to happen is that you're going to have to do this little bit of extra work in order to see the closing price of the stock every day, so you don't have an open stop loss order for intraday trading. Now that's exactly how you're going to avoid this little trap that the Wall Street elite set for you, and how you're going to make sure you're there for those big gains whenever that stock keeps climbing. So while these stop loss orders are incredibly useful tools that you definitely should be using, make sure that you're using the right one, a closing price stop loss. Okay, as you start to employ this trick to make sure you don't miss out on any of those big gains, I want to thank you for joining me for another episode of WSI TV. And as always, please subscribe to WSI TV on our YouTube channel by clicking the subscribe button up in the top corner of this video. But once again, thanks, and I'll speak to you next time.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com, where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.